Hey guys, welcome back to my YouTube channel. This is MacLeod. So today we're going to be talking about how you can build a trading plan and how this can help you in your trading. Trading plan is basically having a plan on your trading. You don't just trade with impulse or just go into the market and then just see markets going in a particular direction and just jump into it. You need to have a plan on how you execute. Having a trading plan will basically help you manage your emotions. We all get emotional in trading, we all know that. And you know the pressure and the fear. But when you have a plan that you're working with, it will just be easier for you. You don't want to be trading with impulse. You don't want to see market going in a particular direction and then you want to just get in. So that's one of the importance of having a trading plan. It can help you manage your emotions properly and help you execute properly. So what should my trading plan consist of? These are 4 things here your trading plan should consist of. 1 is your trading strategy. You have your own way you approach the market. Basically how you are going to execute your trading strategy is very important. Also, how you manage your risk, which is the second one here. How you manage your risk. Risk management is very important. And as well, we also have money management and also trading psychology. These are the 4 things you need for you to be able to build a good trading plan. So we're going to start by breaking down the trading strategy, how you can refine your strategy or how you can build your own strategy, how you can manage risk properly, and also how you can manage your money. The first mission as a trader is to protect your capital. That's a very, very important aspect of trading, being able to protect your capital properly. The last one here is all about your mindset. Forex trading, being in your trading zone and being able to manage your emotions. So let's get to the trading strategy aspect. So trading strategy basically just is all about how you execute in the market. So firstly, you need to know, okay, am I trading just one currency pair? Or for me now, I trade GBP USD only. So that should be like, I'm not going to trade any other pair. GBP USD, even if I have a decent setup on any other pair, be it Euro USD, gold, or any currency pair at all, I won't move to another pair. I only stick with one particular pair. Having that at the back of your mind will also help you. So that's one thing should be part of the strategy. And also time frame. You don't just jump from time frame to time frame. So for me, I use the daily time frame, the H4 time frame, and the 15 minutes time frame and the 1 minute time frame. Daily time frame is just basically the largest time frame for me, where I just understand the larger swing moves in the market. But the H4 is my major trend time frame, which is my pro trend. This is how I identify my structure on H4 time frame, knowing the direction of the market. Basically, what I use my H4 time frame. And then the M15 time frame is basically the intraday time frame for me. And then my M1 time frame is for execution. So I take my entries on the 1 minute time frame. So that's all about that. And also having a trading criteria, how you select your points of interest, which is POI selection. Do I need to see a liquidity sweep? Do I need to see a demand and supply flip zone? Or if you support and resistance you trade, do I need to see price break a particular support or resistance level first? Do I need to see price mitigate a particular trend line or tap a particular trend line? How many touches do I need for support and resistance level? Just basically how you select an area of interest is very important, as well as your entry criteria. What confluences do I need to see before taking a trade? It's very important, because if you can do this, you won't just be jumping into trade because market is moving. You need to have a step-by-step process. You need to be ticking it. Okay, liquidity sweep, inducement, break of structure, change of character. You need to have this criteria, your model that you follow before you take any trade or click that buy and sell button. Also, your exit is also as important as your entry. So it's not about, entering the trade and then you don't know when to get out. I know most of you have experienced sometimes whereby you enter a trade and then you are in profit, you're happy that you're in profit, then all of a sudden you end up taking a loss on the trade because you don't know when to actually exit the market. So it is very important to know when to exit. This is what your trading strategy should consist of. So for risk management, you need to know how many percentage am I willing to risk per trade. You need to know if you are going to be willing to risk 1% per trade or 0.5% per trade. This is basically the standard for me. I normally risk 0.5% per trade. So if you know you are very confident in your trading, you can be risking as much as 1% per trade. Let's say you are trading for prop firm and your max daily loss limit for the day is 5%. So risking 1% per trade is not really advisable if you don't have a high strike rate. So risking 0.5% when you're just starting out is going to be more advisable for you. It's going to be more better for you because you you won't be taking much risk, and you also have free space to play with. So you don't just hit the max daily loss limit with just few trades. So also you need to have a max stop loss size. And you might not think this one is important, but for me it is, because I don't want to be taking a trade where I have a large stop loss. I need to maximize my reward for every risk I take. So I don't want to be taking a trade where I have like 30 pips stop loss. GBP USD now can move, let's say sometimes 100 pips a day, 50 pips a day, just depends on the season or how the price is moving at the moment. So you having 30 pips stop loss or this big large amount of stop loss is not going to be helpful for your risk to reward rate, because before price will move 30 pips, it will take time, and with that 30 pips you can even get 10% with just 30 pips and get 10% reward or 10 RR on your trade. So you being able to use a smaller stop loss is also very important. So you need to have, okay, let's say if the stop loss exceeds 10 pips or if the stop loss exceeds 5 pips, I'm not going to be taking that trade. I'll look for a trade that I have a smaller stop loss that I can use, so I'll maximize my reward. It's not about taking 10 trades in a day or taking 10 trades in a month. You should be able to take one trade. Trading is all about freedom. Even if you can be able to take one trade, make 30%, and then you are done for the month. That's the goal of trading basically. So you also need to have a minimum risk to reward. For me, it's 1:5. If the trade cannot yield a minimum of 5 risks to reward, it's not worth me taking. So if I'm risking $50, I want to be getting $250 minimum. So you may get potential trade of 1:10, 1:20, even 1:50, and so on. But if it does not have a potential reward of 1:5, I'm not winning. So also money management is when do I break even on a trade? Because it's not all about setting stop loss and then you don't know when to move your stop loss to break even or maybe cover commissions or something. Because you can't win all trades. That's just the truth. You need to know how to manage your money properly. So for me, I break even on M1 break-off structure, or some people you can use, maybe let's say if price move 1:4 risk to reward, you can move your stop loss to break it. That's also important as well. Or let's say you can use a trend line break, or let's say some people use pips. If price moves 15 pips in my direction, I'll move my stop loss to break it. You have different ways you can do that. You need to just back test these things and know which one is comfortable for you or convenient for you. So also, when should I take partial profit? It's not about holding the trade on full volume till it gets to your final take. You need to know when you should take partial profits in the market, and you also need to know where to set your target level, which is part of your exit criteria. So these are the 3 building blocks of building a trading plan. You need to have these things in your trading plan. If you have these things, it will be very easy for you to follow, to be consistent in trading. So that's that for this. So we all know that trading psychology plays a very important role in your trading, but having this trading plan like this, being able to have your trading strategy, which is your edge, in check, your risk management, how you manage your risk, and your money management, it can help you in the sense that you will not be too emotional in trading. You'll basically be trading like a robot, because you know that you have a set of rules or a set of confluences you need to see before executing any trade. So it's going to be very important or helpful in your trading as well. So trading psychology, all this, your trading strategy, your risk management, your money management, can help you manage your trading psychology. So we all know that trading is a skill, so you need to focus on the process. Don't just come into trading and then the primary goal you be like, the primary goal is for you to just make money in 6 months. No, it doesn't work that way. The primary goal is for you to acquire the skill and actually learn how to trade. Money is the secondary. You'll be surprised when the money starts coming in when you finally learn how to trade. So stop focusing on the money aspect for now and learn how to trade first. So trading takes time and discipline. You need to be very disciplined if you want to actually be profitable in trading. It takes time. You need to be patient with yourself. You need to always execute, remain consistent with your plan, follow the plan. As long as you know that this plan has been back tested and it will work in the long run, you need to stay consistent with the plan and stay hooked to the plan. You also need to know that you can't win all trades. All traders take losses. You can't win all trades. That's just the truth. There is no way you can have a 100% win rate in trade. It's possible to have 1 week of no losses, a month of no losses, but you can't always win all trades. The earlier you know that, the better. So also, the outcome of one trade should not define you as a trader. So it doesn't matter if you win a particular trade today. That should not, make you overconfident that, okay, the next trade I'm always going to win. It's rather a series of trades. If you take 10 trades in a row, out of 10 trades, you win 7, you lost 3. That is what defines you as a trader, because in the long run, you are consistent. In the long run, you are profitable. It doesn't matter if I'm taking a loss today, but I know that if I take 10 trades in a row, 7 of them will be a win. So that's all about trading psychology. I hope this content has helped you guys out. Make sure you test out this process, make your own trading strategy, and hope this video helps you guys. I'll be dropping more content like this, more educational content as well like this. So subscribe for more content. I'll see you guys somewhere.